All right, let's talk about the very first and maybe the most important decision you have to make when you step into the stock market. Seriously, this one choice sets the stage for everything else, your strategy, how much risk you're taking on, and yeah, your results.
I mean, that's why we're all here, right? To make some money? But hold on. Before we even dream about those profits, there's a big question you've got to answer first. It's all about how you're going to play this game.
You know, the best way to think about it is like you're standing at a fork in the road. There are two paths. One path is a flat-out high-speed sprint. The other, it's a long-distance marathon. Now, both can get you to the finish line, but wow, do they demand completely different skills and a totally different way of thinking.
Okay, so let's check out path number one, the sprint. We're talking about the fast, intense, adrenaline-pumping world of intraday trading. This is where every single second really counts.
So, what is it exactly? Well, intraday trading, you'll often see it called MIS, which stands for Margin Intraday Square Off. It's pretty straightforward. You buy some stock and you sell that same stock on the same day. That's it. Your trades get closed out automatically before the market shuts down for the day. This means the shares never even hit your DMAT account. You're basically just betting on those tiny price wiggles that happen throughout the day. And here's what makes intraday trading tick. The big one is leverage. You can control a huge amount of stock with just a little bit of your own money. And that means, yeah, you can make a quick profit, but you can also lose money just as fast. It is absolutely a high-risk game, and you cannot take your eyes off the screen.
Okay, let's make this super clear with a quick example. Let's say you buy 100 shares of some company for 2,500 rupees a pop. Then, just a couple of hours later, boom, the price jumps up to 2,520. You see that and you decide, yep, time to sell.
So what's the result? Well, that 20 rupee jump on each of your 100 shares, that's a quick 2,000 rupee profit. And you made it in just a few hours. See? That right there is the big attraction of the intraday sprint.
All right, so let's completely switch gears now. We've done the sprint, now it's time for the marathon. This other path is all about playing the long game, trading for the future. And out here, patience, that's your superpower.
We're talking about delivery trading, or what's known as CNC. That stands for cash and carry. And the name makes perfect sense, right? You pay the full price in cash, and you carry the shares away into your own DMAT account. At this point, you're not just trading, you're an actual owner, a shareholder in the company. You can hold on to those shares for days, months, heck, even years.
You can already feel how different the vibe is, right? This is all about ownership, about believing in a company's long-term growth. And because you're generally not using leverage, the day-to-day risk feels a lot lower. It's just a calmer way to be in the market.
Let's run the numbers here too. Imagine you buy 100 shares of a solid company for 900 rupees each. But instead of staring at charts all day, you just hold on. You let it sit. 6 months go by, the company's doing great, and the stock price climbs all the way up to 1,100.
And what's the payoff for all that patience? Well, that 200 rupee jump per share turns into a whopping 20,000 rupee profit. Yeah, it took 6 months, but look at that. It's 10 times bigger than our intraday profit. That is the power of the marathon.
Okay, time for the main event. Let's put these two head-to-head. Seeing them side by side is where the differences in strategy, risk, and just who they're for really pop. So let's just run down the list. Holding period? Intraday is 1 day, max. Delivery? As long as you want. Ownership? Nope for intraday, but a big yes for delivery. Risk? Intraday is high. Delivery is more moderate. Capital needed? Intraday is low because you get that margin, but for delivery, you got to put up the full amount. And the stress level? Yeah, high for intraday, much lower for delivery. That's pretty clear, right? One is for active traders, the other is for investors.
Okay, look, it's fun to talk about profits, but we have to get real for a minute. It would be totally irresponsible not to talk about the dark side. Both of these paths have dangers, and you absolutely have to understand them before you even think about putting your money in.
And I want you to really let this number sink in. 90%. Studies and sources show that something like 9 out of 10 new intraday traders lose money. That is a brutal statistic. And it usually comes down to one thing: a lack of discipline and not taking the risks seriously enough.
For the intraday sprinter, the threats are right in your face. The market can turn on a dime and wipe out your profits in seconds. You make an emotional decision, maybe some revenge trading because you're mad about a loss, and you can just bleed your account dry. And that leverage we were so excited about? Well, it's a double-edged sword. It makes your losses bigger, just as fast as it makes your profits bigger.
Now, the marathon runner isn't totally safe either. The risks are just different, you know?
A whole market crash could hammer your portfolio. Or maybe the great company you invested in just isn't so great anymore, and its fundamentals tank. Plus, your money is tied up for a long time, and sometimes those amazing returns can take forever to actually show up.
So, we've talked about the speed, the patience, the potential profits, and all the scary risks. With all of that on the table, how in the world do you figure out which path is the right one for you?
This is where you've got to be really honest with yourself. Look at the two sides. Which one sounds more like you? Do you genuinely have the time, the energy, and the strict discipline to watch the market tick by tick all day long? Or does a less stressful long-term plan for building wealth just fit your life and your personality better? Seriously, your personality is probably your best guide here.
But wait, here's a pro tip, a really crucial insight. It doesn't have to be one or the other. A lot of smart, experienced people in the market actually do both. They use intraday for a bit of daily cash flow, and they use delivery for the serious long-term wealth building. Maybe they'll put 80% of their money in a safe, long-term delivery portfolio and then play with the other 20% in higher-risk intraday trades.
So, when you boil it all down, it's this simple. Intraday is a high-stakes game for fast money. Delivery is the slow, patient path to building safer wealth. You just need to know which game you're trying to play before you put a single rupee on the table.
And that leads us right to the final question, the one that only you can answer. When you think about your goals, your schedule, your personality, where do you land? Are you team intraday, the sprinter, or are you team delivery, the marathoner? It's your call.